So we're beginning. I want to have a little energy here. So the first thing I want to do is I want to thank Nicholas and his team at the Hong Kong Exchange for being our partners, being our hosts, and for giving us this fantastic facility to host the very first international version of the Greenwich Economic Forum. This is really spectacular. It's hard to get a sense of the scale of this room from the schematics that we were looking at for the past couple of months, but this is really fantastic. So I would really like you all to join me in a robust round of applause for Nicholas and his team. Thank you. Really been a pleasure to work with all of you. So as we begin, Nicholas, you have managed through a global pandemic, you have managed through lockdowns, you have managed through rising geopolitical tensions in the region. So the question that I really want to pose to you right now is, what do you think about Lionel Messi going to Miami to play football?
Well, I mean,
he's Argentinian, folks.
I'm from Argentina. I was in Qatar, so I'm still celebrating a little bit. And by the way, in about 2.5 hours, Argentina is playing against Australia in Beijing, the national team with Messi. Apparently, it's a big deal, and the tickets are completely sold out. So if you have a little break from this interesting forum, maybe you can also see it.
Yes. Do we have any friends in Beijing?
Yeah.
I was thinking that we probably have a better chance of converting Lionel Messi into a rich American than he has of converting the Americans into football watchers.
Maybe. Let's see.
We'll see. But anyway, down to business, so thank you for that. So as Angel said, the theme for this chat is Hong Kong's future role as an East-West superconnector. So being an East-West superconnector is probably more vital now than it has been in quite a long time. So we want to talk a little bit about that, your impressions of that, how the Hong Kong Exchange will navigate the increasingly complex geopolitical situation that we're in, and how you see Hong Kong, the city of Hong Kong's role as a global financial center and superconnector evolving over the future.
Yep. Okay. So, I mean, before you went into the Messi thing, I mean, you mentioned some things that were, quite a reality and a difficult time also for us. I mean, in the sense that with COVID, it was tough to travel, tough to interact with a lot of people, and so with now the reopening and the ability to spend time across the borders, I think our role as a superconnector is more important than ever, because people have not been able to visit the mainland, to visit Hong Kong for 3-4 years. So there's a lot of knowledge that has been lost, and I do think that, by the way, you organizing this event here, the time is like perfect, and it really gives investors from around the world the opportunity to get to know firsthand what's happening. So being well connected, having connectivity is more important now than ever before. We have a very special situation in Hong Kong. We're the most international city of China, and at the same time, we're the most Chinese city outside of the mainland. So I think Joseph mentioned a lot of the things that make Hong Kong very unique, and why I truly believe that Hong Kong will continue maintaining its position as an international financial center and as an important part of connecting East and West. Joseph mentioned a lot of the fundamentals. Of course, he mentioned some really good ones around, like the fact that we have great professionals, like great regulation, a lot of liquidity, the infrastructure, rule of law, free flow of information, free flow of capital. There's a few others. I mean, the fact that, people speak English here. I mean, you speak English and Cantonese. I mean, the fact that Hong Kong dollars linked to the US dollar, you have a currency that is pretty much, linked to the US dollar. The fact that,
quick personal experience too. This is my first time in Hong Kong.
Right.
And I was explaining to one of the other delegates earlier, just how easy it was and how comfortable it feels.
Right.
From the moment you touch down in the airport.
Yeah,
it's instantly
it's
comfortable.
like you get out of the airport like in a flash. I mean, no waiting. I mean, it's so efficient. It works really, really well. And then on top of that, your tax rate, for those of you from the US, we pay 15% here, okay? So If you want to come to Hong Kong, that's okay. Well, if you're a US citizen, you'll still have to pay to Uncle Sam, so it's okay. It's whether it's the tax regime, the regulatory regime, it's the fundamentals of Hong Kong are really, really good. In addition to the fundamentals, you have this connectivity between the mainland and Hong Kong, and we've been increasing that connectivity, adding new programs. We'll probably be getting into a lot of detail into that, and that is, quite remarkable. So I would say that the connectivity is important. The other thing, the resilience. So many things happened, and despite all that, Hong Kong is standing stronger than ever. If you think about the protest, COVID, geopolitics, macro environment, the financial system, it's like a rock here. It's really, really resilient. The resilience is amazing. I just give you some examples from our own market. We used to trade about 88, 89 billion Hong Kong dollars per day in our cash market here. Now, last year was 122, 123 or something like that. So, and we're like around 120 this year. So despite everything that we've seen, institutions are solid, we had like bank failures, we have all these different things, and Hong Kong stands super strong. So this is like another thing. And the other thing is, I talked about connectivity, but some of the opportunities emanating from that connectivity, and I'll mention just one, the Greater Bay Area. We have 13 cities, okay, connected, and they are like within 1.5 hour train ride. This is not, you don't even have to fly, you can drive even. There's bridges that connect. This is the Greater Bay Area, small area, but very important area. You have Shenzhen, Guangzhou, and there's a few other cities. And this has a GDP of $2 trillion. That's pretty much close to Italy. And all within a train ride. And it's the second most important innovation hub in the world. Together with Hong Kong, that's like having Wall Street and Silicon Valley on top of each other without having to travel. It's just quite amazing. This is an incredible opportunity. There's so many companies coming out of that region, so much creativity, innovation, and so many efforts to try to build on those linkages that we have between the Hong Kong and the GBA part of mainland.
Just a quick follow-up on that, and the growth of the region. I was thinking, so as the region continues to grow, and seeing how close everything is, how does Hong Kong maintain its uniqueness? And not just be consumed and brought into this, one big mega city.
Right. So the mainland has a lot of super interesting things, and the level of innovation, the critical mass, the number of people that there are in the mainland is just like, mind-boggling. And if you go there, you can see that vibrancy, that creativity, and all that. So, yes, I think your question is very interesting because you say they're growing so fast, they're doing things like so quickly. But when you have something like also with that size, that big, you have to be very careful on every steps that you take. Today in the mainland, obviously, it's a different system. It's a different currency. Currency convertibility is limited. It's in terms of accessing information, and this is something that is a bit of, quite a bit of difference between in the mainland and in Hong Kong. You're like restricted into what kind of, information is accessible. In Hong Kong, you have free flow of access to information. And the mainland is developing its regime very, very quickly, whether it's in futures, derivatives, but Hong Kong had it for decades. And so in terms of like facilitating movement in and out of capital account is restricted in terms of amount of movement in the mainland. In Hong Kong, it's open. So now the great value of Hong Kong is that it complements a lot of the things that mainland has. Mainland has an amazing retail market, huge retail market. By the way, the exchanges on the mainland, they trade about 1 trillion renminbi per day. It's massive. It's like the US type of liquidity. But most of it coming from retail. Hong Kong is a mostly institutional market. And that's a perfect complement. And we try to use those things to build on our market. Because, I mean, when you have only 7 million people, it's hard to have retail because it's only 7 million people. But we're close next to the biggest retail market in the world. So any good market requires a combination: retail, institutional, quant traders, liquidity providers. I mean, you need that to create a vibrant ecosystem. And we can get it by combining the strength of Hong Kong and the strength of mainland.
Yeah, thank you. Great answer. I want to shift now to a topic. I've seen you write about this. You say you refer to something as the Big Bang of finance as a mega trend. Okay. And I've been following you on LinkedIn. I see how much you've been traveling recently. So you travel a lot, you meet lots of people, corporates and governments. So I'd like you to explain the Big Bang of finance as a mega trend, and then any others that you're witnessing or expecting.
Yeah, so the travel is a little bit of like revenge spending almost. Like, I mean, it's like after not traveling for like 3 years, I mean, you just like want to get on a plane again. But I think I overdid it. I've been traveling so much.
We're both a little jet lagged up here. If you see me sweating too, it's because the screen is very hot and I'm a little jet lagged.
So I mean, this is, you know, really interesting, because for anyone that is interested in finance or loves the business world and all that, it's important to understand what's going on in terms of the development of capital markets, asset management industry in China. It's gigantic, but something of a proportion that you have never seen. And it's going to happen over the next 10 years. And it's some simple math. I mean, I'll just like build on it and what it means. Today, the capital markets of China are roughly around 30 trillion US dollars. 30 trillion, okay? That's about 10 of equity capital markets and 20 of debt capital markets. In the next decade, that number should reach well over 100 trillion. 100 trillion. That is, you know, a very massive number, and I'll build on how I get to these numbers. I mean, and it's been happening, by the way. I mean, this trend is not new. I mean, if you look at historically capital markets, how it has evolved and how they have grown, it's inevitable. And when you look at the household wealth today, household wealth, there's about $100 trillion in household wealth in China, but a lot of it is locked into real estate. Household ownership is very, very high, over 90% in the urban areas. And then on top of that, a lot of the rest, like 30 trillion, is locked, well, not locked, but it's in like savings account. People just like keep it in savings account. And so the opportunity to make this grow at the same time that the economy continues growing, and let's say it's not like this 7%, 8% that we're used to in history, like of growth. Let's say it's even like 4%. And let's assume that at some point there is a little bit of inflation in China as well. I mean, right now there's none, but let's say even if you have like 3%, 2 to 3% of inflation, I mean, with those numbers, in terms of nominal GDP, over 10 years, you double GDP. GDP today is about $18 trillion. You'll go to 36 trillion. And any multiple that you put on that based on capital markets as a percentage of GDP, or if you want to decant it and do debt capital markets as a percentage of GDP, or equity capital markets as a percentage of GDP, I mean, those numbers, when you aggregate them, for most economies that are like significant, important around the world, they tend to be somewhere between, at the worst case, like 400% to like 600-700% of GDP. If China is $36 trillion of GDP, just going to 3 times, just 3 times, and you're at that 100 trillion number. And that's like creating a whole US capital market in 10 years. It took the US 100 years to do it. I mean, China will we'll do it in 10 years. And I'm not assuming, this is not crazy assumptions. This is like basic assumption. I'm thinking 4% GDP. You want to use 3? Okay, it doesn't change that much. I mean, it's like, you know, it is expected that this will happen. And if you get it a little wrong, okay, it'll be 12 years, 15 years, whatever it is, but the opportunity is so gigantic. And we see this, how, for example, pension system is developing. The savings of people in terms of like, you know, now you have a system where people can do it on a private pension, that, you know, a third pillar of the pension system. We saw what Australia happened. Australia only had 20 million people. This is 1.4 billion people. And you saw the size of the pension system in Australia. And you have so many companies that want to raise capital and raise money, and so many people that want to put that money to work. They have the highest savings rate in the world, like 45% savings rate. You start putting all these things together, it'll create a massive capital market. So anyone that loves finance, if you're here, well, you're in the right place. And so that's why I think this is like a mega trend that, you know, I mean, combine that with the fact that like capital activity, mobility, a lot of it is coming more towards the east. And it's logical because, I mean, in 2000, Asia represented 30% of world GDP. In the next 10 years, it'll be 50. Half of the world GDP is going to be here. From 30, 20 years ago to 50. But besides that, like the creation of capital market value is huge. And a lot of this capital needs like experts, people like you to be able to help drive it, allocate it, and there's a lot of policy support. Despite everything that you hear, I mean, the focus of the mainland, regulatory bodies, leadership, is to make sure that the markets are the key element defining the allocation of resources. And why is that? Because, I mean, they have a lot of capital and they want to make sure it's allocated in the right way. So that's like an important mega trend that I'm very excited about. Of course, I mean, happy to talk about technology and how that affects sustainability, any of the others.
Well, you just mentioned something that made me think of a panel that we've got coming up later in the afternoon, and we're talking to one of the local CEOs, financial firm CEOs, about, you know, being a CEO and attracting talent. And since you won't have an opportunity to sit on that panel, which would have been fascinating, would have loved to get the give and take between you, maybe spend a couple of minutes just talking about that, you know, with that mega trend in front of all of us, and given the challenges of the last couple of years, like, what's it like being in your seat right now, managing a company like this, you know, in this city at this time, attracting the talent that needs to be here to participate in that mega trend?
Well, I mean, obviously, HKEX is a great company. I mean, we're a very large, you know, market cap company, and it's fabulous to be leading this company with like great people and a lot of talent, and we have so many great things to do. What I love the most is our purpose. I mean, and we're a purpose-driven company. We want to connect, promote, and progress our markets and the communities they support, wherever they are around the world, for the benefit of all. That's what we want to do, through our connections, make sure that we can benefit everyone. And we have a key role. So what, I mean, I'm just trying to think the important points that I'd love a lot of you to take home, especially those of you that have traveled from abroad and are thinking about our markets. And many times, what you hear a lot is how perhaps we're seeing more and more decoupling, how the world is becoming more fragmented, especially between East and West, US, China, and how everyone is closing down a little bit and trying to, like, you know, diversify the supply chains, or, like, you know, shutting down, not being as open. What I can tell you is the experience that we have seen here in Hong Kong as a bridge that connects China and the world. In the last year and a half, we've had more connectivity initiatives between Hong Kong, between China and the world than in the last 8 years. So any notion that Hong Kong is kind of, or China is shutting down, it's not seen or proven by the facts. We've launched things like, initially was Stock Connect many years ago, then Bond Connect. Now then, July 1st of last year, we launched as ETF Connect, a connectivity program to trade ETFs between the mainland and international markets, which is like very, very unique. Then we expanded the access to northbound Stock Connect, expanding it by like 70%. There were 1,500 names that could be acquired through Stock Connect by purchasing here in Hong Kong in mainland stocks. Now you can do
just to not to interrupt. Yeah. But that was a question we wanted to get to, and I did. You know, I think a lot of folks here probably are familiar with the famous Connect programs,
right.
but you know, some of them, especially some of the folks that have traveled here, maybe aren't as familiar as some of the locals. I would actually love to hear you talk a little bit about the origin story of those programs and kind of define them a little bit for those of us that aren't.
Yeah. So essentially, Stock Connect is we connected our exchange with Shanghai and Shenzhen. So essentially, you can put an order here, buy essentially a stock in Hong Kong, but the transaction takes place in Shanghai or in Shenzhen. And the reverse, that's called northbound. The reverse takes place as well, which is southbound. Someone in Shanghai, a retail person, institutional investors, they buy in Shenzhen a Hong Kong ticker. The transaction is routed and takes place in Hong Kong, but the order is put in the mainland. So we have the three exchanges connected through this program called Stock Connect. It's been incredibly successful. 72% of the international purchases in the mainland come through this mechanism. Big institutions, I mean, they have like something is called a QFII quota, that you request a quota, you open an account, I'm sure you can do it, but you have to set up an account, everything. So that's the other 28%. But this program has been so successful that it's used like, because you can buy from anywhere in the world and just like do it super seamlessly. So that's a Connect. That was implemented starting in 14, then in 17 expanded, and then we added Bond Connect. So you can do the same thing in bonds. And that was also very successful. And 60% of the trading that happens in interbank bonds happened through Bond Connect. And then we started expanding, and we said, why not ETFs? So we allowed people to buy ETFs. Now, the problem is more people are holding mainland stocks, but they don't have hedging instruments. So we said, okay, allow us to launch a futures contract based on A-share markets. And so we launched an MSCI A50 futures contract. And then we said, okay, we need to do this also, but not only on shares, but also on bonds. So we just announced a couple of weeks ago the launch of Swap Connect. So essentially, bondholders that have government bonds holdings in China, they can now hedge their interest rate exposure. And that is amazing because the swap market onshore is very big, cannot be accessed internationally. This allows you to do it internationally with a lot of your collateral being actually offshore and everything. And it's just like amazing. And then we're also, it's been announced, we're going to launch renminbi, bond futures. And then next Monday, you're coming at the right time. Next Monday, we launch something that is incredible, that is shares in Hong Kong. Initially for the top 24 companies, I mean, they're going to be traded in both Hong Kong dollars and renminbi. So we're going to create some vibrancy in between those markets. And there'll be dual counter market makers that will arbitrate the prices between both counters. This is important because we have about 1 trillion renminbi here in Hong Kong in savings that can be used to acquire like stocks in renminbi. And eventually, because the mainland investors, they have renminbis, they'll be able to acquire stocks in Hong Kong with renminbi. That will be huge in terms of bringing that retail into Hong Kong, creating that symbiotic process of like institutions, retail, liquidity providers when get together. But the biggest one of all, and this is the one that you have to take home, okay? The biggest one of all is the ability for international companies that list in Hong Kong, that they are from anywhere around the world, to now, for the first time, investors from the mainland, whether it's retail that qualify for Stock Connect or whether it's the institutional, they will now be able to buy those international companies if they're listed in Hong Kong. So that means something that was historically a perception. No, Hong Kong is a market where all in these international players, all the big players from the world, they just go and buy Chinese companies and finance Chinese companies. That's it. Actually not. It's a two-way flow. Now any company in the world can decide to have access not only to all the international investors, many of you that can invest here in Hong Kong and you're global participants and all that, but also get access to something that no one had access before, that retail and institutional investor base from the mainland, which, by the way, it's uncorrelated with the rest. So this year, no one does IPO. No IPOs. The world is like really bad, really soft, and US is like down 60% capital raise. So actually, the rest of the world, China, fine, lots of IPOs. Yeah, they're being funded. I mean, even Hong Kong, in terms of number of IPOs, actually we're 30% up. We're down in terms of size because it's a bit small, but we're down like 7%. But the mainland, it's uncorrelated. Everyone in the world increasing interest rate. Mainland just lowered the interest rate yesterday. Everyone inflation, they have no inflation. So imagine if you're a company to be able to have access to the gigantic investment base in the mainland that no one has access to, plus the international. There's only one market in the world that gives you that. Only one market, Hong Kong. That's the one to take home. Okay?
And I think that's the high note that we can end on. Thank you. So Nicholas, thank you very much for joining us today. Thank you for being our host. Thank you for that wonderful presentation. Thank you all for listening. And I think we're transitioning to lunch. We started kind of late because this is a working exchange, and we need to keep the floor open for an IPO that might come through. So we're starting a little bit late. That means we're coming from our first panel right into lunch. So stick with us. And thank you again. Yeah. Thanks so much.